Good morning, good afternoon, and good evening. Today we're going to be talking about filing taxes because it is around that time of year. So what we want to be able to do today is we want to be able to define tax vocabulary, understand the who, what, when, where that's involved with claiming taxes, and read a W-2 statement. We also want to be able to decipher between some common ideas that might be myth or might be true when it comes to taxes. So up first, you can claim your pet as a dependent. So what is a dependent first? A dependent is somebody that you're going to financially support. So a lot of people try and claim their pets every year because sure, we financially support our pets. However, this is indeed fake news, okay? You cannot claim your pets. So as we said, a pet is someone that you, or a dependent, is someone that you financially support. You have to provide at least half of the person's total support for the year. That's including food, shelter, and clothing. And dependents are someone related to you or live in your household. Could be a spouse, child, or elderly parent. On to fact or fiction number 2. Everyone pays the same amount in taxes. Is this true or false? In this case, it is false. How much you pay in taxes depends on a lot of different things, one of which being your filing status. This is important because an individual's tax bracket, and therefore the amount they must pay every year, is determined by marital status, the number of children you have, your occupation, and several other factors. You must file your status honestly, or else it will be considered fraudulent, and penalties will be assessed. So every year the government double checks whatever you have for your taxes, whatever status you have, to make sure that it is in fact true. Fact or fiction number 3, any working employee has to file for taxes. Basically, if you're working, you must file your taxes. This is false. There are some instances when you do not have to file for taxes. If you're single and under the age of 65, the minimum amount of gross income you can make that requires a tax return, the filing of a tax return, is, let me check my notes here so I make sure this is correct. I believe it is $12,400. You can, and probably should, still file, though, even if you didn't make that much. So basically, if you make under that $12,400, you don't need to file your taxes, but you should, because you'll probably end up getting a refund check, okay? So it's still good to file in that instance. This is the actual chart for the 2020 filing requirements. You'll see everything that factors into whether or not you have to file or not. So first and foremost, what's your status? Whether or not you have to file is based on, are you single, head of household, married jointly, married separate, or a qualifying widow or widower. So your status affects it. How old you were at the end of 2020. So you can see the big number in here is whether you are older than or younger than 65. And last but not least, how much money you made in the previous calendar year. All of those things go into whether or not you have to file or not. Fact or fiction number 4, you can file your own taxes without a tax professional. I think for the most part people know this one already. This is absolutely true. There are plenty of different ways that you can file your taxes. First off, you can manually fill out the forms yourself. Get the forms, fill them out. This is difficult though, because if you're the one filling out the forms, most people don't know all the tax breaks that are out there for you. So doing it by yourself, you might be more inclined to make a mistake or not get the proper amount of money back that you would hope for. Number 2, you can hire an accountant or a tax guy. Professionals can find those tax breaks that you may or may not know about. So tax breaks based on your particular situation, especially if you're an entrepreneur. Find an accountant who has clients in that area. For example, Miss Baker and her husband own a company in videography. So they have a tax person that actually deals with a lot of videographers. So he knows the specific tax breaks that are available to people in that field. Okay, they can also help you determine if you want to reinvest your money. They can help advise you in that way. And last but not least, this is what a lot of people understand. There's software out there, there's websites where you can answer questions and it prepares you for your own tax return. Some of the ones that are out there, obviously TurboTax is the big one. I think everybody's seen a commercial or an advertisement for TurboTax. TaxAct is similar, but a little less expensive, and there's other places that might do it for free, such as H&R Block, but they can still take a portion of a return if you do get one. And last but not least, when do you need to file by? All of your taxes need to be filed by April 15th every year. You can apply for extensions, and some businesses do that, but it's, for the average person, it's usually just easier to get everything filed and get all your paperwork turned in before the end of April 15th. Fact or fiction number 5. When you file your taxes, you will get a refund check. This is a live picture of me laying in my bed at home. Yes, I lay on a pile of money because I make the big bucks as a teacher here. Just kidding. This is not always true. This is the case in a lot of times when, yes, you file your taxes and you will get a refund check, but it doesn't always, you're not always guaranteed to. You may or may not get a refund check. It depends on an individual's situation. So again, this is all case dependent. Their dependents claimed or their items that they have claimed. So if you've claimed too many dependents, let's say you claim you have 5 kids. The government's going to be like, oh my God, you got 5 kids. We're going to cut you a break. You're not going to pay as much in taxes this year, which is cool for you. You're not forking over as much money from your paycheck. However, when tax season comes around, the government, like we said, double checks on that. So if they look and they say, oh my God, you don't have 5 kids. You should be paying us way more in taxes. Now you owe them a lot of money. If this is your situation, then instead of getting a refund check from the government, you're going to have to pay whatever taxes that you did not pay during the year. So this could be a little bit, it could be a couple $100s, or it could be a few $1,000s, depending on how much you should have paid the government. So staying on top of making sure you understand what you're filing and making sure you're paying enough taxes throughout the year is going to really benefit you when it comes time for tax returns, so you don't get stuck with that big bill. Fact or fiction number 6. If you receive cash tips, you need to claim them on your taxes. This is a little bit of a tricky question. So this is actually going to be a truth or a half-truth. Technically, if you make under $600, so if you're talking a very small amount of money in cash tips, you don't need to claim them. However, anything more than that, you do have to claim them. Now, I'm not saying that everybody always does. I know plenty of people that worked as servers that did not claim every single dollar that they made in cash tips. However, it is important to understand that this is breaking the law, so you are playing with fire in that instance. So if you are caught not reporting or under-reporting the amount of your tips, the IRS, which stands for the Internal Revenue Service, this is the government agency that monitors taxes, they can levy a penalty against you. They can charge you, what you owed, what you didn't pay in taxes, along with, they could say, hey, you're gonna basically pay double that because of your penalty. So it could cost you a lot of money if you're under-reporting or not reporting all of your cash tips. So the W-2 statement. Some of you have jobs, have filed taxes this year, know what a W-2 statement is, and can read it and understand it. There's really not too much that goes along with it. However, there's others that probably seen the W-2 statement and just gave it to their mom or dad or grandma or grandpa or whoever and let them take care of their taxes. So it is the form that you are given. There's a couple different types of these tax statements. It's the form that you're given that you're going to need to file your taxes with. And it's really not as confusing as you might think. When you work for an employer and make an hourly rate or salary, you will receive a W-2. Tax statement on or before January 31st. They need to be given to you by this date. This tax form is a year summary of how much money you have made and how much you've paid in taxes. So how much you've earned and how much you have paid in taxes for Social Security, Medicare, federal income tax, state income tax, all those things. The other type of form is a 1099 tax statement. This is another form much like the W-2, but this is for contracted side hustles. For example, if you are working Uber, you're working as a construction subcontractor, any business where you're selling something for others, maybe you make a commission, whether you're selling skincare products, makeup, vacuums, whatever it happens to be, you're going to end up getting a 1099. You can also write things off, and basically that means, hey, I'm spending money or I'm claiming expenses for this business, such as domain name, gas for business travel, meetings for clients or team members at a restaurant. So like if you have a home office and you do a lot of work from home, you can write off like, oh, I had to buy a desk, I had to buy a computer. This is all going for work stuff, so you can actually get small tax breaks because of that. Just the more you know, the better when you go into these tax things. So here is a copy of a W-2. Looks kind of confusing, but it's really not. On the left side over here, you have your info. Below that, this section right here, this is all just how much money you've made throughout the year. So this is your earnings. Okay. Again, down at this end, there's just more with earnings. And then on the other side, you've got your company's info or your employer. Your employer's info, along with how much you paid in taxes. Okay, so one side is how much money you've made, the other side is how much you've paid in taxes. So it's always interesting to see at the end of the year, like, oh my God, I made this much money and they took out how much in taxes? Like it ends up being a big chunk of change. And it's kind of staggering or surprising. Last but not least, fact or fiction. Miss Baker at some point has made a mistake when filing her taxes. I know you might have heard a lot of stories about how Miss Baker has made little mistakes in her life, whether it's buying a car or, banking issues or anything like that. However, taxes, wait for it, she's not here to say it, but I will tell you, she has made no mistakes with filing her taxes. This is one area where she has stayed on top of it. She's got a tax guy that helps her out, so she has not made any mistakes with taxes. So, just to recover our objectives for today, we want to be able to define tax vocabulary, words like dependent, filing status, W-2 form, understanding what those are, understanding what the who, what, when, where, why is involved with claiming your taxes. Hopefully you are a little bit more knowledgeable about that now. You want to be able to read a W-2 statement. Despite the fact that there are a lot of small words written on it, it's really only got a small amount of information there, and it is pretty easy to read. It talks about your earnings and how much you paid in taxes. And last but not least, we wanted to be able to decipher between myth and truth when it comes to taxes. I hope you guys learned something new today. I hope you have a great week. Make sure these notes are completed and submitted for full credit, and have a wonderful day.